Welcome to the Foundry, where leaders are forged daily. I'm your host, George Roberts. Hello, entrepreneurs. Welcome back. This week, we interview Angel Williams, multifamily investor and founder of Lorren Capital, and host of the Academy Presents, a podcast devoted to helping others realize the benefits of real estate ownership. Welcome, Angel.
Hey, how are you doing?
Great, thank you. It's great to have you on the show. Welcome.
Thank you.
So, wow, it's always amazing. You know, when we talk off camera, I sometimes feel like some of the very best material is squandered. So I'm not going to give away anything you told me, but I will ask you. So before you turn to entrepreneurship, which I believe now is going on 10 years for you, over a decade, correct?
Yeah, it's been a while.
Been a while, huh? So what was the most memorable job you worked?
Oh, goodness. So probably it would have been when I worked the lumber counter at Sutherland's, because I was a private school teacher Monday through Friday, and I would work the Sutherland's counter Friday evening, Saturday, and Sunday. And it was
awesome.
It was different.
Yeah, just different change of pace, different than teaching, huh?
Well, I knew a little bit about building materials, and I learned a lot about building materials working there. And it was also the only place that I didn't put down that I had a master's degree. And it was the only place I got an interview. So this would have been 2003. And it was the only place I didn't put it down. And I felt bad when I signed that thing that said, "Are you telling the truth?" I was like, yes, I am. But I had applied a million places and I wasn't getting any callbacks. And so on that one, I just left it off and got a call back and got the job. And I got to meet some really cool people and learn a little bit more about construction work and building materials. And it was just, I don't know, it was just different. You wouldn't expect, I don't think, me to be in that kind of a job.
Okay. Well, that's awesome. That's got to be a great value to you now.
It's helped.
Yeah. Okay. Good. All right. Yeah. Well, I have my own story of getting out of academia. You know, it took me many years applying for jobs in industry before I finally broke out. Had to get a master's degree in computer science to do it. So it's easy to get pigeonholed.
Yeah. Well, I'm teaching a dual credit econ class right now. It started out as like I needed to do something, and then it came around as a favor. Someone was like, "Hey, can you take a couple of econ sections in the, this term?" And I was like, "Yeah, I can." And I wound up with 52 high school kiddos that were pulling dual credit, and it was like, wow.
That is exciting. Yeah, economics. So then, so you did a few things. You did your master's in economics, lumberyard, and then you ended up in real estate. So tell us about how you got that start in real estate.
It's actually kind of boring. I grew up in a family that invested in real estate, and the crazy thing was I was raised by my grandparents, and my grandmother only went through 8th grade because her family did some migrant farm work, and so she would have to go and help pick cotton every year. So she made it through 8th grade. My grandfather, of course, he graduated from high school, and he did a year in I think it was like a military academy before joining the Army. But my grandpa worked real hard for C's. He did wind up getting his associate's degree, but I put all that out there just to say that I don't think that they were what most people think of when they think of real estate investors. But they were what I saw as wildly successful. They had a little quad, they had a little trailer park, they had some single family homes. And so it was very natural for me to move into that sphere as I got older. And then my husband, his family also was involved in real estate investing, and his dad, I think they had over 70 units of residential multifamily. So a whole lot there. So we come from like different backgrounds, but we both were in families that were in real estate investing. So it was just the very first house we bought, we knew it'd be our first rental. So kind of boring.
I think that's actually exciting. So, as they say, the apple does not fall far from the tree. And in my family, my father, he did finance and he was actually in agriculture as well. So he started out born on a farm and ended up going into finance and also real estate. His dad similarly, he ran a general store and a farm. So I tried to go the other way. I went into biology, did bio research, and look what happens, right? Ended up in the family businesses.
You know what? That's so funny. So my father-in-law's bachelor's degree was in biology, his master's was in mammalogy, and then his doctorate was in museum preservation. So it must be a biology thing, or a science background thing, that people in the sciences get to be very successful in real estate investing.
Yeah, I noticed some of my favorite people like Peter Harris, often engineers. I think you may have a story about that.
Yeah, my husband is an engineer too.
Yeah.
So
Yeah, that's beautiful. Yeah, that ability to understand numbers is how I explain it. You understand numbers and you are 10 steps ahead in this business. So I think it's super fine. That's one of the demographics I like to focus on: people in engineering, data science, data analysis. I'd really like to help those people find their place in real estate because once you understand numbers, it's not that hard. We're talking spreadsheets here.
yeah. Well, I told Jason he needs to get in touch with you, because when I
Uh,
saw that you like were in data science, I was like, oh, I
yeah.
bet y'all could make a killer underwriting spreadsheet together.
Uh-huh. Uh-huh. Yeah, I am looking forward to that. You did mention your husband, and I do look forward to meeting him. That would be definitely a great group. Yeah. So, okay. So for you, like a lot of people, they have this sort of aha moment. It's like, oh, I'm working for the man. It's not working. Hey, I know what I'll do. I'll quit my job and go into real estate. But for you, maybe it was a little different. You were introduced to it through birth. And so it looked like it was something that you had always been doing on the side, despite your interest in economics, etc.
Yeah, it was I don't I actually didn't leave teaching until last year. I love teaching. I miss my students a lot. And I used to call
Yeah,
they're my kids. I miss my kids. I miss them a whole lot. But it was really an environmental kind of thing. I couldn't I couldn't stay in that work environment, and there wasn't a doctor in town that was going to release me out of FMLA to go back. So that was why I had to leave teaching. I do still teach college. I adjunct, so it's not real time consuming, but it gives me a way to stay kind of on top of my game with that. So that's fun, and I just enjoy being a part of it. And honestly, that was the reason why we started the Academy Presents, was because it's a way for me to feel my teacher heart, without having a classroom. So
I love it. Yeah, that's one of the things I notice about successful people, that truly successful people, they always get to that point. They want to give back. That is a very important step in that series. So you mentioned the Academy Presents. So I understand there's actually three wings to your business. Do you want to go into those?
I can. And like, there's currently three. We don't know how far it's going to go, but what we did was, I knew that, well, and my husband and I both knew that we wanted to do something kind of that was like a throwback to education. So you might notice that our logo is kind of similar to something you may have grown up with if you are our age. Uh, so it was kind of that
Oh,
throwback to,
interesting.
yeah, maybe Schoolhouse Rocks, but I didn't say that
Uh,
because I don't want to be in any level of infringement.
yeah.
But it was kind of a throwback to that. And we used some of the primary colors. And the hope is that we'd be able to do our summits and be able to do some podcasts eventually and share the educational piece of it. And then my husband, he kept saying, I want to go active side. I want to go active side, because we've been passive. And I'm like, man, I don't understand how you're not being fulfilled. Well, because he still has his W-2 and he wants to be underwriting. He loves spreadsheets. Like, when I think about him and spreadsheets, I think of like Scrooge McDuck. as he's like diving through all of his coins in his vault. Only for Jason, it's spreadsheets. And he's like diving and swimming through his spreadsheets. It's the craziest thing. It makes me want to vomit because I do not like spreadsheets. But that is his thing. So he was like, I want to use that. And so we started Second Set of Eyes, or he started Second Set of Eyes. It's really his thing, where he does different levels of underwriting and underwriting review. If you just need him to check your numbers, he can do that. If you want to take it a little bit deeper, he can do that. And if you want him to be your underwriter, he can do that too. For it's more of a fee. Or if you want to pull him onto your team, into your GP, and he can underwrite and he can do lots of other things. He's actually really good at managing. Like, I can't let people go. It's very, very hard for me. And it doesn't seem to be as hard for him. So we've definitely split those roles there. But it's he can take on more roles than just underwriting if that was the choice of someone. So there was not that initial outlay of cash. So that on the underwriting side of it. And then we're about to put on our 4th summit. The first one was crazy, hardest thing I've ever done. But it's crazy also how fast your comfort zone catches up. And so we're about to put our 4th one on, and I decided that I wanted to help others since the virtual event scene has really taken off. And I started Behind the Curtain, and it is a concierge virtual event services business. So if you want to do a virtual event, or someone around you wants to do a virtual event, basically you figure out who you want to be as your speakers. And my request is that you contact them, because they're probably going to respond more positively to you than me, as they know you and not me. So you would collect your speaker panels and all of that stuff, and come to me and say how you want it to look, and I will do my best to absolutely make it happen. So
Yeah, that's very exciting. Yeah, something that's taken off recently, that's to put it lightly. So yeah, you may have gained new clients today. So I definitely want to talk to you about that and find out what it takes to get that sort of thing going. That is very exciting stuff, very exciting. So then, how about this? So you do have a background in economics, something that you still continue to this day. Very exciting. And, we talked about how it's very important to understand numbers, and engineering is a great background, but I feel like there may not have ever been a better time to be an economist in the multifamily space, because there are literally so many things going on these days that are unprecedented. I mean, you see, since the Volcker era, we've seen interest rates, just decline in a very secular way, although there have been some shorter trends of those timeframes. We hit 0 in 2008. The Fed was out of ammunition, so to speak, started to hike again. And now, with Corona, we're at 0 again. Like, what is the, actually, I could make it simple. I could just say, what does the Fed do next? But I would just like to ask you, with all of the dollars that have been printed over the last year, and as I understand, there was a few months period where 40% of the greenbacks that had ever been printed were printed over that very short time frame. And yet, if you believe the statistics, we really don't have inflation. So what's actually going on, or where is the inflation going?
So mathematically, there cannot not be inflation. The 40% is more than what I heard. Last I heard, it was that 25% of the money supply had been printed. So the way I look at it is this: you go from a money supply that has 4 equal pieces to now we have a money supply with 5 equal pieces. Well, when you think about it like that, and you think of it in terms of there's more, and you realize that the total value of your money supply has a specific number to it. For simplicity, let's just call it 100. The money supply is worth $100. And all of a sudden, the money supply goes from 100 pieces of currency, each worth $1, to 125 pieces of currency, or 120 pieces of currency, but the total value can still only be $100. Well, then each individual piece of currency is worth less. There's no way to increase the money supply and not have the value of each piece of the money supply decrease. It has to. which reduces your purchasing power and gives you inflation. And if you look at, I mean, the thing is there's so many things playing into it right now. So like you've still got broken supply chain, you have decreased production, you've got lots of things playing into it. But when you look at lumber prices, they have skyrocketed 35-40%, which doesn't match the mathematical calculation for where inflation should be landing, like at 20-ish%. We're beyond that, but you still can see some of it there. One of the tricks I've always kind of shared with my students is look at the prices of necessities. So when you go to the grocery store, look at the price of milk, look at the price of salt, look at the price of toilet paper, look at the price of those things that you have to have. And when those start changing in price, when those start going up, we've got inflation. Whether or not anybody's ever going to admit to it, that's what's going on. And it's so funny that you bring up Volcker. So Volcker discovered, how do we fight stagflation? We increase the interest rate. He increased it by a whole percentage point, right? And people lost their minds. But with him, we know how to battle stagflation. But the other thing I heard was that if the interest rates increase by 2% or up to 2%, the US cannot keep up with its debt service. And so what's going to happen? Well, this artificial manipulation has to continue in order to keep us in a situation where the US stays afloat. I don't know, because the can has been kicked so far down the road for so long. I don't know what can happen. I don't know what's going to happen. There's just so many things acting right now that it's hard to isolate one or two or to say, well, if we just didn't do this, if we just didn't do this. I mean, there's 20 things playing right now. It's hard to isolate.
Right. And I like the way that you put that. I mean, I don't know how many people actually realize that we can't keep up with our debt service without these artificially low rates. And so what happens if we have further crisis? All they can do is print more. And it reminds me of a scene from Alice in Wonderland, where the Red Queen says that she has to keep running faster and faster just to stay in the same place. Yeah, very, very frightening.
Wow. That's a really accurate visual though.
Yeah.
Man.
It is staggering. It's difficult to say what's going to happen next. And here's another thing, well, obviously it's going somewhere, as you said. And from my perspective, it's going into the stock market, right? I mean, you have, less productivity, less employment, and yet we have all-time highs. People are just, they don't have anything to spend it on. They can't spend it on services, right? So what are they doing? They're saving it for the first time ever. It's going into houses. People are improving their houses. They're buying new houses as quick as they can be made. And you see real estate is just shooting up like crazy. So then my question to you, because I see a lot of controversy in my network, is this sustainable, at least in, say, the short term, say 5 to 10 years? Can these real estate prices be sustained, possibly by, justified by underbuilding over the last 10 years? Or have we, crossed some threshold where we're going to have another housing bubble like we did have about a dozen years ago?
So I think that there's going to be a couple of different players going. The first thing I see is the prices going up is a little crazy, a little out of control. I think some of that is market driven. Some of it is broker driven. But the flip side of that is you've got sticky price theory, right? So once prices go up, they generally don't come down by much. It's kind of like the reason why it may be hard to get a raise if you're in your W-2, because if they give you a raise and something happens, you're not going to be very open to taking less money for the company if things start to tank. Yeah. So kind of the same thing. But I mean, if you think about some of the prices that we've seen go up over time, I can remember buying gas, and this is going to date me, but in Okay, in 1997, I could fill up my Honda Civic for like $10. Gas was literally 79 cents a gallon.
Yeah.
That is not that long ago. I remember when the price of gas went up to over $4 in, that would have been 2005-ish. And we haven't seen a huge reduction since. It got down to 2. Did we go under 2 in the last 10 years? Maybe. Have we gone under 1? No way. And it's kind of an example of sort of an example of sticky prices, just because, you know, your local corner mart isn't making a ton of money off of gas. A lot of the price of gasoline is due to taxation and regulations and a lot of things that are outside of the convenience store locations control. So gas may not be the best example I could give, but the fact that prices haven't really fallen in tune with what's going on with the market kind of displays it. I think the better ones are probably when you look at wages or you look at what you pay for a dress or what you pay for a nice shirt. I can remember when I could get polo shirts on sale for my husband for like $35. Now they're on sale for $50. And that's if you can even find them on sale, because usually when they hit the 33% off rack, everybody's landing on them. So it's, but we've just seen an overall increase in prices over the last decade. People say that it's been pretty normal, but we've seen some increase, and then we've seen a lot of increase in probably the past, oh gosh, I hate putting time frames on stuff, like 3 to 6 months.
Right.
Especially in the services industry, those prices have gone up quite a bit. I know we have a restaurant here in town we like to go to because we try and stay local with the restaurant business and stuff. And we used to be able to get a pretty good meal for $30. Now it's $50.
Yeah.
So, and yes, there's a tip calculated in there too, but still it's a $20 increase for 2 people. And that's pricey. I mean, and maybe that doesn't sound all that expensive because you're from somewhere else, but I'm in North Texas. There's 104,000 people in my town. We're not real huge.
Yeah, interesting. So, yeah, you mentioned my favorite example there is the gas, right? I mean, that'll go up on the basis of futures, and it only comes down on the basis of competition. That takes quite a while.
Well, it's got a janky demand curve because there's a certain amount of fuel that all people demand,
Right.
and then it kind of teeters off, and then you've got another demand curve that comes in for people that can afford to purchase it or purchase it for recreational usage. And so
Right.
it's got a janky demand curve. So it's not my favorite thing to bring up, but it's something that everybody deals with.
Yeah.
And so that familiarity tends to lead to its usage.
Exciting. Well, let's pivot back to the academy, just in case we have people that don't appreciate the fineries of economics like us. So you mentioned 3 phases of your business, 3 exciting phases, and there could be more. So what's the next big step for this enterprise?
Well, I guess I kind of need to bump back to Lorren Capital. We've decided to go active side this year. So we're going to be moving active side and syndication, which is exciting. But I think that that's going to open up more possibilities with the Academy Presents, because when I see that there's things that people need, I'm like, because like there's a need for people to have their underwriting reviewed. You know, there's, especially with everybody going virtual, there's a need for someone that can assist with someone that's coming on the scene new that wants to do virtual events. And then just with the real estate investing rocks, when someone comes in new, there's a need for them to be able to get a base level of education. And so we try to fulfill needs. And I feel like as we move more into the active side of syndication, we'll find needs. And so we want to be able to help people and to meet those needs. And so there can be more. I don't know how far down the rabbit hole we'll go with it, but we created the way we did so that there was that option.
Great. I love that ability to grow, or that option to grow. And so then so for the last several years, then you've been operating Lorren Capital as passive investments. So this is your LLC with your husband. And
Mhm.
then maybe you can tell us some of the advantages of having a separate LLC for your investments.
Absolutely. So we actually did a series because we knew we'd eventually use it. And we do have our own personal stuff too. We've got 5 single family homes, a quad, a couple of duplexes. I've got some land that my great grandparents' house is on that I need to do something with before it implodes. It's a very old home. Um, and we've got some oil and gas investments. And so we're trying to be diverse without being ridiculous about it. So we have that kind of stuff pulled into the LLC as well. Um, but being passive in syndications taught us a lot. You would think that it doesn't, but I bring it up because it taught me personally about the variance in what passive investing can look like. So with our single family homes, we have property managers, but we still get that phone call if it's something big that needs to happen, if something needs to occur with an insurance claim, or if the city sends us a letter that says, hey, we're going to fine you if you don't mow the yard. I mean, there's still things that we have to take care of. We thought that was passive. And then we found our way into syndication for multifamily, and we started passive investing there. And it is absolutely, truly, and literally passive. We just get a deposit on those distributions. And it's like, I thought that was passive. What?
Yeah.
And there's
Uh-huh.
there's just this huge spectrum of what passive investing looks like and can look like. And so that was really cool to learn. I've learned other things that I never even knew about, like you can, as a passive investor, you can request a list of all the other passive investors and their contact information and receive it. If you can't get it by procedures set forth in the operating agreement, you just go to the state and get it, because it has to be registered. And so then if the majority of the LPs are unhappy with the way the asset is being ran, they can boot people off of the GP and replace or take over. And I had no clue. I had no clue because I thought as an LP, you're truly passive. You don't do anything. You just collect your money. You give them money, you collect your money. I had no clue that there was even like a spectrum of passive within a passive investment. So it's wild.
So that touches on a lot of exciting issues, including corporate governance. So this is not like booting Mary Barra from GM. We're talking about a smaller number of investors, like maybe 50 or so. And so there are also some voting rights issues with that too. So some of the way these LLCs are generally set up, basically it is the GP that does the voting and the deciding. So how do you circumvent that?
So I have never been involved in it. And I've heard about it like a couple of times now. And I'm like, what the heck? I'd never heard of it. And then all of a sudden I'm like bombarded with info on it. And I guess they just get together and like cast their votes into a hat. I have no clue. But it's happening, and I just cannot imagine being unseated from a GP. That just blows my mind. But I mean, it is what it is. I mean, I've learned that from being a passive investor. And I've also learned that when you rely on your intuition and that inner compass and you still wind up in a bad deal or in a deal that's not producing the way it was originally expected to, you can't hold that against yourself. You're going to. I did for a very long time. And I'm just now honestly really coming out of it. And it's been months and months. But you've got to recover from that. It's not like it's your failing. You were bamboozled. And there's people out there that are really good at bamboozling others. So
Yeah, so I like it. It sounds like you and I have a very similar investment philosophy. I would say that there's no investment that is truly passive, even if you invest in stocks You should be doing a great deal of due diligence, should be reading financial statements, earnings calls. There is a lot of work to be done. A lot of work to be done. Yeah, and I would say that being a passive investor can teach you a great deal. You mentioned that there's a large breadth of things you can invest in. I have a short list here. This is preparatory to a future YouTube video, but what can you syndicate? You can syndicate land, construction, multifamily, agriculture, entertainment. Nowadays, that's usually more a matter of the crowdfunding. Retail, industrial, self-storage, mobile home parks, ATMs, office spaces, hotels, oil, gas and mineral exploration, closed-end funds, open-end funds. It's pretty amazing, the range of things. Literally any investment that is too large for a single individual to undertake could be syndicated. So it is a huge educational opportunity, and I would not wish to understate that for any of our listeners. It's a great way to dip your toe in the water and figure out whether you would like to be an active investor. And sort of, I shouldn't say verboten to talk about returns, but not a good idea to make promises. But I'll say from my own experience, managing single family and doing, a fair bit of work on that end, and comparing that to some passive investments, it's often easier to take advantage of those economies of scale and let somebody else do the work than for you maybe to go and buy another single family home and then get the calls for the plumbing and whatever else you don't like doing.
Yeah.
Yeah.
No, it's yeah, to let somebody else have the reins on that is absolutely and totally worth it. I tell you, like, until we got into the multifamily space, we had never heard of all the different ways you could invest. The first time an ATM fund came across my email, I was like, what is this? And I'm looking at it, and you put, say, 100 and I think that one was like 104,000, and you get 6 ATMs or 7, whatever it was. And you're in there with however many other investors that it takes to fund that particular syndication. And they do all the maintenance, they do all the placing, they do everything. And it's projected, $2,500 a month payments over the life of it. It was like an 80% return over the 6 or 7 years that you're into this thing. And I'm just like, how did I never hear about this? Right. And then I've got friends that are like, oh, who uses ATMs these days? And I'm like, ew, you've never known what it's like to have to get your food off a card, or have to get your check for that month off a card. And people don't want the whole government knowing what they're doing with their money. And so you have to go to an ATM to get to get your funds off of those payment cards. So it's excuse me, my allergies are crazy right now. So people don't understand how much of the population is still frequently using ATM machines.
Oh yeah. For me, the issue is that your principal essentially goes down to zero after that 6 or 7 years. That ATM gets ripped out, and so you do get this incredible return, but there's nothing residual to sell. That is your return to principal as well as your interest dividends. So that's one that I've never indulged in, but I am considering angel investing now. I'm going to the Money Show. I don't know if you ever heard that, but those listeners who happen to be accredited can get into that space. And now that is another crazy thing. You got to say no. I've been told 40 times for every one time you say yes. Nice thing about real estate is you can do pretty well even if you say yes to a decent proportion of deals. But that might change, as you were saying, the issues of breaking into the GP space, or getting activist investors. I think that's going to happen a lot more in the future. There are going to be a lot more deals going bad in the future. They've had a pretty good run.
Well, it's pretty much been a golden era for the last decade or so.
Yeah.
I mean, there was some blips in, like, I don't know what, 2011, 2012, 2013. But it's been pretty amazing since. Very hard to make a wrong decision.
So then let's head into the last section. I just like to give you an opportunity to give some advice to maybe some newer people. And now you came in, through your family, right? So you have an entrepreneurial family, real estate family. Who's been the greatest influence on your entrepreneurial career?
Oh gosh. Well, of course, my grandparents have been a huge influence in my life because I feel like they weren't the norm to be successful the way they were, but they also got in the late 80s or late 70s, early 80s. So Volcker era, when it was kind of the same situation that we just came out of, where if you had any level of liquidity or capital and you invested into real estate, you were going to be successful. Um, so there was that. And then I see from my husband's side where his family was well educated, they were able to get into it at a larger scale. But I have a lot of respect for my father-in-law because his background wasn't business. Um, he could play stocks better than me. He could play real estate better than me. And there were times when, heck, times that the whole time it was incredibly humbling because he was so good at it. And I was like, I've got a stinking business degree. How is he so much better than me? And it wasn't even just like this, it was like massively better. And his understanding of different real estate, finance, all of those topics was just leaps and bounds beyond my understanding. And a lot of that was self-taught. And it just blew my mind. So I have a lot of respect for my in-laws as well. Just seeing how far they were able to go. It was yeah, I mean, humbling on all levels, and a lot of respect for them.
Beautiful. So what is one bit of advice you would give your younger self?
Um the hardest things haven't killed you yet.
All right. So just keep going, huh? What doesn't kill you make you stronger, huh?
Yeah.
So what about inspiration? So where do you get your inspiration to keep going as an entrepreneur?
um we have a special needs son,
Hmm.
and when he was first diagnosed, there were 742 cases in the world. He's got a really rare genetic condition, and we actually, there's so few that when he got his diagnosis, we did get a phone call from someone in the organization that was like, hey, our child has it too, let's talk, because there wasn't a lot of answers. And so what we want to do, number one, is make sure that we create enough legacy wealth that our daughters only ever have to worry about loving their brother, and that once we're gone, all they have to do is make sure there's care. They don't have to come up with the money. They don't have to come up with any of that. They just love their brother and make sure that the level of care that he is receiving is up to where it needs to be. We also want to create a foundation that donates $100,000 a year to the main foundation that researches and educates on Duke 15Q, because that's what Anson has. And we just remember how much it sucked because there weren't a lot of answers. And we want to do our best to make sure that as more people get the diagnosis, that they're able to get more answers than we were, because it's just hard. And so that's the inspiration and the guiding, and we want to make sure that our girls get to be the best they can be as well. Yes, we want Anson to be the best Anson he can be, but we also want, Julianne and Josephine and Jacqueline to be the best they can be as well. And to do that, we really have to make sure that there is the backing and support there, not just for Anson and not just for what he has, but for them, their goals and their aspirations as well. And I don't think there's a way to do that without without knowing what our plans are and what their roles are going to be in the foundation, in our real estate business. And if they choose to go something totally different, that's okay too. And we want them to know that we're going to support that move for them as well. And it's just a lot of different directions it can go, and we've got our plans, and we'll see how it all plays out.
Yeah, that's very heartwarming. The desire to leave a legacy can be very, very powerful. So what advice would you give a new entrepreneur?
Just because you feel like you are lacking, don't stop doing what you love. Um, there's been plenty of times when I've been like, I'm running the summit and what am I doing? I'm a passive investor. How can I possibly help anybody? I'm just a passive investor. Or I've only invested in this many deals. I only have this many doors. You know, don't discount what you know. And don't stop pursuing your dreams just because you feel like an imposter or you feel like you're not enough. Because, I heard the other day from Michael Barnard, he was like, I'm always going to be one step in front of someone. And so there will always be someone you can help. Don't don't discount yourself because you're doing way more than other people sometimes.
I love it. Can you send us out with a memorable story from your entrepreneurial journey?
Oh goodness. um okay. So our very first renter would have probably sent a lot of people out of being a landlord. Don't let that kind of a blip at the beginning discourage you. Um, she dodged rent in the middle of the night, left all of her stuff behind. We had to pay $500 to get her stuff removed. There's actually a different word in my head for that. Um, we had to pay a bunch of money to get her stuff removed. And then we had to do a whole nother make ready because of her stuff. So don't be discouraged when that happens. There are ups and there are downs. And I think that had my husband and I not grown up in families where we saw those ups and downs, we would have ran and we wouldn't be where we are now. So there are going to be ups, there are going to be downs. It's not all rainbows and unicorns. It's not all crap either. It evens out, and just if you get hit up front with the crap, the good things are coming. Just don't be discouraged and don't run away just because you hit some bad things in the beginning.
I love landlord stories every time. every episode there's a great landlord story that just seems to take the cake. So I want to thank you, Angel, for an animated and inspiring take on entrepreneurship. Thank you so much for coming on the show, and don't forget to tune into the Academy Presents.
Oh, thank you.